Hello and welcome to BQ Prime. I'm Hiral Daria. Joining us on the show is Ajit Mishra from Religare to discuss more in terms of what's in store for the markets as it is weekly expiry. And clearly, there is some bit of selling pressure that is coming in the last hour of trade. Welcome to the show, Ajit, and a pleasure to speak to you as always.
Same here, Hiral, same here.
Ajit, my first question coming to you is clearly the domestic markets actually edged higher in early trade, and there was some bit of low level buying that was seen as well. Some bit of positivity coming in from the global markets, but now slow and steady selling is what's coming in. What's the sense that you pick up, and what are the key levels we should be picking?
So that's right, Hiral, that we started on a firm note, taking clues from the global market, positive global market. But since we have this, weekly expiry, we are seeing volatility, and again that Nifty is down roughly around 0.5% in today's session as well. So if you see that that last swing from 16,800, 16,500 zone to 18,400 plus zone, it's a healthy consolidation or correction that we are seeing in the market right now, and we feel that 18,050 is the key area where we have multiple supports, short-term supports, both in terms of the price wise plus the short-term moving averages are also placed around that level. So as long as we are holding our 18,050 levels, it's okay. But yes, this consolidation at the same time, volatility on the stock specific front, that is keeping traders on the edge. So as of now, it's prudent that one should restrict position, let the market stabilize a bit, and banking financials they are holding strong, alongside with FMCG and the auto pack. So it's prudent that one should utilize this space to accumulate quality stock from these sectors instead of timing the market.
Right. So, Ajit, overall, let's quickly look at the key monitorables. Right. Clearly, it's the selling in frontline names is what we are seeing. Secondly, despite the recent reversal that we've seen as well, we've continued to trade above the 20-day EMA, which was at around 1878. Plus, you have the WIX, which has been dropping along with Nifty in yesterday's session, and you have the PCR, which is back to levels of around point 0.8, or 0.85 kind of a range. Now, taking these points into consideration, is the underlying message and underlying tone still positive?
Yeah, that's right. So yes, we are seeing a bit of a profit taking in the sectors which were outperforming earlier. So like auto is slightly in the back foot. We are seeing select stock in the FMCG space post IT ITC number. We are seeing decline in the ITC as well. But it's just normal or healthy profit taking that we are seeing in the market right now. So anyways, like sector like energy, IT, they were not participating in the move. So it's nothing much to worry from that front. I feel that a couple of factors which is going to dictate the trend is whether the bank nifty, which is trading close to the record high, would be able to manage around the current levels or not. Because today we are seeing that the damage is capped in the index just because that banking financials are holding strong, while rest of the pack are witnessing pressure. So this is going to be a critical thing to watch out for. 42,600, 43,000 zone is a very strong support area for the banking index. And apart from banking, we feel that this normal profit taking in the auto and FMCG that should also subside in a day or two, and then we can see the resumption of the trend. So as of now, as you rightly mentioned, that the 20 EMA is also placed around 18,050 mark. So all these factors are pointing towards this consolidation might end in a day or two with a positive resumption of the trend.
Right. So, are we seeing 44,000 in terms of bank nifty a key hurdle to cross?
Yeah, that's right. So 44,150 is basically the record high. We've almost reached to that mark. We've crossed that level for a brief, but we couldn't sustain. So yes, there's a possibility that every time we reach to such key pivots, the record high is a 52-week high. Generally, we see that the stock or index witness some consolidation. So that is what we are seeing right now. But the positive part is that the private banking measures they are still looking very firm. So yes, there's a marginal profit taking in all the private banking names. But collectively, if you see the index, private banking index, they are holding very strong. There's a possibility that we might see like a couple of days of more consolidation. Maybe it can extend it for 3-4 days. But the tone is positive, so that is something which one can feel good about.
Right. So if you talk about few of the names, say for that matter, or Canfin Homes or AU Small Finance Bank, Chola Finance, long positions that are being created on these names, what should the strategy be according to you?
So yes, Canfin Homes, like nearly around 8 7 8 month of consolidation breakout, decisive volumes. Though with the correction in the market, we are seeing a bit of profit taking from the higher levels. But I feel it's okay that one can continue to accumulate this stock. 660, 670 is the zone basically where one can accumulate this counter with 640 as a stop, and positionally around 720, 730 is what one can wait for in Canfin Homes. And similarly, AU Bank, it has made a new record high, and still holding gains despite the kind of profit taking that we are seeing in the market. So that clearly shows that this breakout is very strong, and this zone close around 730 will continue to hold. So as a trader, your stop should be at 730, and positionally we can wait for 800 plus zone.
Right. Ajit, let's look at a ITC as well as a SBI as well. Now, both these stocks, clearly we are seeing shorts which are being built up. Both the counters have reported earnings in today's session. What would you recommend?
So ITC, we have hardly seen any consolidation or correction last several months. So it's still holding above the short-term averages, which clearly indicates the trend is still positive. I feel that as a trader, in case if you're holding any position, to 416 should be your stop on spot basis. In case if you're holding existing longs. And for fresh buying, yes, I would recommend you to wait, because there's a possibility that the stock might witness further consolidation or correction. After seeing this phenomenal surge. In a similar way that SBI, post numbers, we have seen this strong rally from 500 to 590, and that's why we are seeing this profit taking post numbers. But 570 is basically the immediate support. So as a trader, one can definitely hold the position, but for fresh buying also in SBI also, we feel that one should wait and let the stock stabilize around 570 levels, and then they can look for fresh positions.
Right. Similarly, Gale on the back of numbers, the stock is down almost around 3.5 to 4% in today's session. 10% up move is what we've seen in the last on a YTD basis, and that up move actually has started from say end of October, November, where the trajectory has been upwards on the Gale. Clearly, again, you're seeing some bit of shots that are being built with regards to Gale as well. What should the strategy be according to you with a Gale?
So in fact, either we had a recommendation on GAIL, and the stop loss was at 106, which it has hit in today's session. So we feel that the stock might consolidate further, but broadly, if you see, the stock has been trading around the record high. So it's just a normal consolidation that we are seeing in the stock. As like what we were discussing earlier, that usually when the stock or index reaches around the record highs, we see some consolidations and time spending before entering into a new trajectory. So that is what we are seeing in GAIL right now. So in case if you want to buy fresh, utilize this dip, maybe level close to around 100 to 104 is a good buy zone. And with the stop at 98, one can still look for buying position in game.
Right. How are you looking at a LIC housing finance? Because it seems the longs are being unwound with the LIC housing finance. A good amount of shedding that's happening on the OI front as well. What would you do?
So yes, see among the other stocks from the NBFC basket, LIC also have witnessed decent recovery from 320 to 400. It was almost a vertical rise, but in the last two trading session, we have seen a very sharp decline in the stock. So yes, this could be a profit taking alongside with the unwinding in the future segment. But I believe that this pressure may subside now, because we have multiple supports around this 360 365 zone. So as a trader, I would not look for fresh position, but yes, for the existing position, one can still wait, because there's a possibility that it might witness some rebound and you get the better level to exit. So maybe closer to around 375, 380, one can look for exiting, and meanwhile maintain a stop at 360.
Right. Ajit, apart from the names that we've discussed, anything that comes to your radar that someone should look at from a Friday trade perspective?
So yes, again a disclosure that we have recommended to our clients. Bharti Airtel, the stock has been hovering in this band close to around 740, 780 for last 5-6 months, and now we are seeing a bit of decisiveness that despite the ongoing volatility in the market, it has been holding strong above the short-term averages and found a fresh buying pivot. There's a possibility that gradually this stock will witness some momentum also, and can retest the record highs closer to around 855 levels. So with stop of around 778, one can look at Bharti, for fresh buying. And alongside with Bharti, we feel that stock from the auto space, Maruti. also look good after this recent correction. So maybe closer to around 9,000, 8,900 levels, one can accumulate Maruti. And again, in the next swing, there is a possibility that it might, retest a level close to around 9,400.
Right. So that's with regards to where Bharti Airtel, that's another stock that Ajit has been recommending. Thank you, Ajit, so much for joining us on the show and giving us those views with stocks that one should be looking at from an investment perspective. But clearly, if you see in terms of markets right now, we are well below the 18,150 mark, and that's what the closing looks like. And the advanced decline ratio, which was positive in the first hour of trade, has now moved towards the bears. You have 35 declines and 15 advances on Nifty 50, and we are trading in the red. Putting pressure is Davis Laboratories, Adani Ports, ITC, SBI, as well as M&M, whereas on the positive end, you have Bajaj Finance, Bharti Airtel, Kotak Mahindra Bank, ICICI, as well as an HCL Tech. Let's quickly look at Bank Nifty as well. Clearly, that has continued to stay in the positive with gains of around 0.2% coming in there. But we are above those 43,750 levels currently as we speak. Overall, if you see in terms of the Sensex as well, the pressure is coming in from ITC, SBI, L&T. These three are the top contributors to the kind of cuts that we are seeing in terms of Sensex, which is down a little over 90 points and below the 61,500 mark. Overall, if you see in terms of stock-specific action as well, majority of the one which are reacting to numbers. So you have a SBI, Jindal Saw, Jubilant Food, JK Tire, which is under pressure, which is seeing profit booking, and a Honeywell Auto, which is seeing gains of almost 9 to 10%. So good moves coming in few of the names, and the earnings season does continue, and it is expiry, due to which the volatility has continued to remain high. That's all that we have in this session. Thanks for watching, and have a great evening.